Yeah, the Aussie market is up pretty strongly over the first month of this year. Do you think traders are being a bit too optimistic?
It's always about what's in the price when it comes to investing, and across the world you've seen a pretty strong run in equities from late last year actually continuing into this year, and that's that expectation that you are going to get this bit of a Goldilocks scenario where we see inflation fall, central bankers really step back from hiking rates, and also no recession around the world, particularly in the case of the US. Now that's probably happened faster than we had expected, so we'd be a little bit conscious that anything that happens to upset that narrative or creates an air pocket could see a bit of a pullback in the equity market. And you've got to remember, when we are in a bear equity market that has dropped more than 20%, it's not unusual to see the market rise and then fall again. So we'd just be a little bit cautious about the attitude towards owning too many equities at this point of view. And we think there's probably lots of opportunities in the fixed income space as well.
You mentioned central banks. The US Federal Reserve lifted rates again this week. How far behind is Australia falling from its global peers?
I think it's all about setting interest rates that are right for the economy. We never expected the RBA to have a level of interest rates or a cash rate that was the same as the US. I mean, the US had a much bigger problem with inflation. They had a much bigger problem they had to try and curb in terms of what drives that inflation, with wage growth being, close to 6%. Australia hasn't faced those same ramifications. They don't need to have an interest rate that's as high. What's important is that central banks in 2022 went from 0 to 100 when it comes to thinking about the speed at which they tightened monetary policy. And now they can really start to think about moving towards a pause and actually being at the end of that rate hike cycle and not near the beginning. And the RBA is there as well. So we expect the Fed will probably hike rates again in March. We think the RBA is going to hike rates in February when it meets. And that is probably likely towards a pause as well, as we do know that monetary policy acts with quite a considerable lag on the economy. We have to see how it's going to impact the housing market, how consumers are going to react. And they don't want to over-tighten policies to really curb more growth than they need to.
So rates in Australia could peak at 3.35%. Do you think inflation has peaked in the December quarter as well?
I think it has, and that's really down to the fact that you are seeing now falling energy prices around the world. If we look at oil prices or natural gas prices, we're also expecting food prices to come off. Those are two big components. We think about headline inflation and what we really feel as consumers. And then we do know we're going to see slowing activity in the housing market. And again, as the borders open up, we get more migration coming through. We're going to ease some of those concerns around the labour market, and that wage pressure, which drives a lot of the services inflation, is likely to start to come down as well. So we would expect inflation to fall across the course of this year, heading back down towards where central banks want it to be by the end of this year. The question is just how close we get, and whether central banks really want to hammer inflation back below their targets.
We also had retail sales figures out this week showing sales fell almost 4% in December. Do you think that was consumers tightening up their spending due to rising mortgage rates, or did they just do their Christmas shopping back in November?
There's a lot of seasonality when it comes to much of this data. I think a lot of that happened back in November in terms of that spending, taking advantage of those sales rather than thinking about it just being delivered within December. When I look at the Australian consumer and we compare them to others around the world, it is a case of thinking about the fact that we still have an elevated savings rate compared to what we see, say, in the US, where it's been used up. That's very much support for thinking about the consumption. We still have a consumer that is looking at the labour market and thinking there's still opportunities for jobs, and wage growth is moving higher than it has been for some time. So that does support their outlook. But we would expect them to tighten their belts a little as we think about rising mortgage rates come through, that rolling off of fixed mortgages that's going to happen this year. And so obviously consumer activity will slow in the economy, but not to a point where we really think about it creating a recession in Australia.
And just finally, what do you think is one of the biggest risks to Australia's economy this year? Is it those $370 billion in fixed mortgages coming off over the next 12 months, or is it something else?
There's always been concern with the leverage in the housing market in Australia, just how high it is by international standards. I think we must contrast the fact that we are going to see that big reset in mortgages with what's in offset accounts and how much cash is actually in balance sheets, or how much cash is actually in bank balances across the Australian economy. So I think that'll mitigate that to a certain extent. I think it's definitely going to be an area of thinking about how do we get rid of that deleveraging in the household sector, and really whether we see the global economy continue to grow. Australia as an open economy is going to benefit from more global growth, and so as long as we see that resumption activity in China, improvement in Europe, that's likely to feed through to positive sentiment towards Australia. The biggest risk here, I think, is still when it comes to the central banks over-tightening and killing off that growth more than anything else, with what could be a relatively mild year for the economy, but still one that's only roughly about trend growth, so nothing super in that sense.
Well, Kerry Craig, Global Market Strategist at JP Morgan, thanks so much for your time.
Thank you.